In this video, I'm going to run over the trades I took for last week and how I was able to execute them with this new simple strategy I learned over the week. If that's something you would love to see, please stay to the end of this video and watch. For last week, I only took two pairs, which is OP/USDT and Bitcoin USDT. So let's run over both trades together. And we're going to be starting with the OP/USDT, then I head over to the BTC USDT. For the OP/USDT, we can see that prices were bullish at this area rather. Then we mitigated that zone and we had a break of structure at this area. Then we're waiting for prices to reverse and give us another break of structure, which will break and close above this structure, which is 2.4968, but we did not get to see that, and we broke the recent low, which is forming a change of character, or a bearish change of character. Means market sentiment changed from bullish to bearish at this point. So since we had that, we waited for a reversal and we got that reversal, and the way we do count our reversal is 3 candles after the lowest candle. So we had 1, then we reversed down, we did not continue the structure down, then we had this 1, 2, 3, which is our complete. Okay, so once we see these 3 movements, we know that the reversal is gonna take place. So what we did next is that we tried to use the Fibonacci tools to get a very perfect zone that we would like to enter. So what I did was I tapped into my Fibonacci and I went to the highest area down to the lowest area prices has got into at that particular market structure. So as soon as we did that, we mitigated that zone at this area because we had 2 zones, and this is the second zone here that I would like to use as well. So we mitigated the first zone, so I'll name here the other block. So we mitigated the first zone and we actually tapped into that zone. So what I did is that I headed over to the 15 minutes time frame, since we're in the 1 hour time frame, and that's where we got the market structure. So I wanted to see a price action on the lower time frame and execute my trades there. So I went over to the 15 minutes time frame, which I did here, and I understood what was happening there. So on the 15 minutes time frame, we had this market structure: high, low, and high. Okay, so after this high, we had the 3-step candle, which took the prices here, and we broke that structure as well. Now after that, we were waiting for a 3-step candle to confirm if here would be our swing low, but we actually did not get that 3-step candle, and we're going to consider here as a full market structure. Okay, so here remains a full bullish market structure as considered. So after that, we had a swing low from this area down to this zone, because it's actually met up with our 3 candlestick pattern to confirm the low. So we are waiting for a break of structure to confirm here as a very good low, but we did not actually see that break of structure. We actually closed here with a candle wick, in which we are not going to verify that side as a break of structure, since we closed with a candle wick. So we do not recommend that side as a break of structure. It is just a singular structure that tapped into that zone. Now a lot of guys will be saying, where would be our current low? Since the prices already took out this low, we have here as our current low, and we do not have another break of structure ahead of that place. So we are still going to maintain this area as our current low, and that was why I wrote this pound star symbol at this area, signifying it as our current low. Now as soon as we tap into this zone, we're waiting for prices to actually take out here to form another bearish structure on the 15-minute time frame, but we did not actually see that structure, or we did not actually see the strategy that way. We did not actually see candlestick formation in that, or chart patterns formation in that way. So we're not going to recommend here as a break of structure or a bearish break of structure, but anyway, we had a nice strategy that could help us execute this trade very well. So all we need to do is that we wait for prices to tap into the zone. So as soon as prices tap into our point of interest on the higher time frame, and we have zoomed into the 15 minutes time frame, we count 3-step candles, as we have said, to confirm that area, to confirm the reversal of that structure. Okay, so we're waiting for a bearish structure reversal at this point of interest, and we're going to count that 3-step candle down and confirm that reversal pattern. So what we are going to do is what, as we tap into this zone, this is the first one we tap. Initially this was the first one, but we actually reversed. We did not see the 3 stick candle to confirm that reversal, but we actually tap into this area. So we're going to start from this one, this blue one here, and we take 1, 2, 3. Okay, so that's already valid. That has validated that we are in a sell zone. Okay, means the sell reversal is actually very good as well. So what we're going to look out for again is we're going to look out for a clear reversal. Okay, a clear reversal. And how are we going to get this reversal? We're going to count another bullish structure candle to get 3 candles. Okay, 3 ascending candles to confirm that that reversal is also going to take place. Okay, like I said, the first one, we are going to count the reversal down. Okay, 3 candles away from the first one that tapped into that zone, in which we had 1, 2. Okay, because this white one is an internal structure, so we had 1, 2, 3. Okay, so we're going to count 3 buy candle after the last sell candle. This was the last sell candle, this white one, because after this one, it doesn't really matter the color. The color doesn't really matter as well. All you need to do is what, count the candle according to how it is forming, the formation of the candle. That is what really matters. Okay, so we'll take this reversal 1, and we got this one is higher than this white one, a little bit higher than it. If we use this here, you can see this one is a little bit higher than that. So it is going to be 1, 2, 3. So this 3 has already validated that zone. All we need to do is what, take our Fibonacci 2, and we do from the highest level to the lowest level as well. So let's take from this highest level to this lowest level. Okay, from this highest level to this lowest level, we got this area. Okay, as we got this area, we placed our sell limit. We put our stop loss above this zone, slightly above this zone. If you have watched the previous video about stop loss, I'm going to be tagging it under the description of this video, so you can go and watch as well. You would know how to set your stop loss properly. Okay, so we gave a little bit of space in case of slippage, and we targeted 3.6 ratio. Okay, 3.6 RR, and we got to that destination. Initially we were supposed to take 3.1 initially, but we did 3.6, and we did actually get to our destination successfully. So that was how I executed this trade, and I'm going to be showing you how I executed the second trade, which was the BTC USDT. So for the BTC USDT, the first thing we did is that we identified structures on the 1 hour time frame, which we are going to be using as our higher time frame. And on the 1 hour time frame, we had this nice bullish structure. Then we executed the trades at this area. Okay, we executed that trade at this area, but that was pretty much like last week, and this was the only trade I took for this recent week that just went. Okay, so what we saw that what we did is that we first identified the current market condition, and we saw that the current market condition is in a bearish form. So we saw this change of character that signifies that prices are shifted from a bullish structure to a bearish structure on the higher time frame. And we actually did the same thing. We used our Fibonacci tools to get our classic zones, and that we actually got at this area. We got this nice zone at this area, and our prices did not get to this last one. So what we did next is that we zoomed into the 15 minutes time frame as well, the same way we did on that one, and we identified market structure on the 15 minutes time frame. So for the 15 minutes time frame, we had this high, we had this low, then we broke this structure. Okay, then we had this change of character. Now a lot of people will want to take trades this way, but you don't take trades in a random area if it doesn't get to your point of interest. That is absolutely wrong, and that is wrong to do. So you wait for prices to actually get to your point of interest, because your point of interest validates that trade very well. Okay, so we waited for prices to actually get to our point of interest, in which prices tapped into that point of interest we already drew down. So here remains the recent swing low level on the 15 minutes time frame. If we had gotten prices to break this structure, we would have called this a change of character for our perfect SMC entering, but actually we did not do the normal SMC entering. We waited for that pattern I showed you on the OPUSDT. So what we did is that we were looking for 3 candles that will just go in one formation, okay, go down or go up in one formation. But since we are looking at a bearish structure, so we'll be looking for 3 candles that will go down instead of going up, okay, since the overall direction is bearish on the hourly time frame. So how to execute this is that we took 1, 2, 3. Okay, so as soon as we saw that, we'll be waiting for that same reversal we were saying or we spoke about earlier. Okay, so this was the last bearish candle, so we're waiting for that reversal. So we got this first one, but it was rejected by this one. Then we got another one, 2. We got another one, 1. Yeah, so we count this one. This one will be the recent low. We'll say 1, 2. Then we had a massive reversal to this level. After this reversal, we got this first one, but they had a rejection here. So but this area is still valid until we break below this area, then we devalidate the whole zone. Okay, since we are still in this zone here, so our price action is still valid. Okay, so we are still looking for that candle pattern to validate our reversal. So what we did is that we waited for this last candle here, this last bearish candle, which was blue. Then we started counting. This was 1, 2, and we will count it as a fake out because the structure did not continue after this one. Then we had 3. You can do that. You can also count from this white one. You can take 1, 2, 3. So means that area is valid. All we did next is that we took this Fibonacci 2 at this side, we ruled down to this area, and we got this nice zone. Okay, so we executed trade at this zone and we put our stop loss above this high. Okay, and we targeted 3 ratio. As soon as we got to this area, I actually did 4, but our initial target, as I always say, is 3 ratio. Okay, so if we wanted to do 3 ratio, we would do it to this level here. Okay, but we got 4, which was actually nice, so we executed that trade again. So if you need to understand this pattern very well, just go over the video again and again. You would actually understand how I executed this trade rather. So pause this video, watch it again, pause it, watch it again. Okay, so to execute this trades this way, all you need to do is what? First identify the overall pattern, then you can now execute trades this way. Okay, see you guys next week. Next week I'm not going to be posting videos because we're closed for the academy, so we're going to be opening on the 4th of January 2024. Okay, see you guys next year and catch you guys. Thank you.